Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for 𝗧𝗶𝗱𝗲. Today is Thursday. It is July 8th. It is the second trading week of July, and boy, oh boy, look at the Dow. We're down almost 500 points. The Nasdaq's down almost 200 points. The S&P's down 56. This is not randomness. Now, I hate to say I told you so, but I told you that the market is extremely vulnerable. And when I talked about the vulnerability of the market, I talked about momentum, and I explained to you last week. Let me just kind of review here a little bit. Let me go here. Just kind of give you a clean chart and give you a review. Now, I explained last week when we talked about it, actually, it was probably 2 weeks ago. I said that the market's making new highs, but I showed that momentum levels, look at the number of stocks. Any stock trading above the $2 level in the stock market, 40% of stocks are above the 50-day moving average. And that's as of right now. Now, if you look at the S&P indices, you will see that 49% of stocks, you don't even have 50% of stocks trading above the 50-day moving average, and this sucker's making all-time highs. And I said yesterday that we should be right around here, that this is a grossly overbought market and we should be cooling off, and this is not a time to be a hero. So the market is extremely vulnerable and extremely overbought. Now, why is this happening? What's going on? What's the big news? Well, it's important. Global stock market, Wall Street fell Thursday after the minutes came out. And it's like we're not getting any breaks here. Talked about the possibility of reducing the U.S. stimulus. And this is what I love the most. Japan, instead of canceling this darn Olympics, they're gonna declare a state of emergency, COVID emergency during the Olympics. Wouldn't it be just easier to postpone it or shift it somewhere else? I mean, we were also talking about that months ago, and I was wondering, how is that all going to shake out? South Korea reported a one-day record increase of 1,275 new infections. But here's the reason why the market's down, not because of Korea. Minutes from Federal Reserve's latest meetings in June gave an upbeat outlook for the U.S. economy recovery and showed board members discussed how and when they might reduce monthly bond purchases that inject money into the financial market. And remember when I said that interest rates, which are greatly overbought right now and are overreacting, they said they're going to reduce purchases, and what are the bonds doing? They're up 1.11%. Real smart, right? This is way, way overdone. I would be selling bonds at this level right now. That's just way, way, way too much. Bonds should revert back to their main trend, which is down, especially in light of what the Fed is saying. And remember I said that I have a feeling that we're going to start declining towards the end of the summer. I said around end of August, early September. Well, look at what they're saying here. Fed's minutes showed that the taper announcement seems poised for the August-September timeframe. I've been only saying this for 3 months now, 4 months. So just pointing that out. So again, it looks like economy's getting better, rates are getting better, and the stock market is down. But the interesting thing is this tick bar right here at the 434 level, it honestly should be near the 415 level. And if the Nasdaq large caps like Amazon, all the large cap stocks sell off, you're going to see the S&P and the Nasdaq a lot weaker than what we're seeing right now. The indexes are not giving us this is not a real representation of the stock market. Look at this. We're making all-time highs, right? But let's look at the number of stocks in the Nasdaq that are trading above the 50-day moving average. Let's look at it. Why not, right? 68%. Way, way, way too much, and it's going to turn south very, very fast. It's already turning south. Now let's look at the number of stocks trading above the 200-day moving average. Oh, my. 86%. Look at this. Let me show you this. Look at that. Near the highest level we've seen since 2009. So I don't think we're going to stick around these levels much more. Notice the highs are getting lower. I think we're going to get to the 50-day line. We need this, folks. We need this so the stock market could go higher. As far as reports today, we've got jobless claims. I think the numbers are going to be solid. Anything below 400,000, 380,000, the 4-week moving average is at 392,000. Anything lower than 400,000 will be good. Even if it's slightly above 400,000, between you and me, The number has been really good lately, and I'm not expecting anything crazy. Now, with this market down, my suggestion for you is to stick to smaller stocks. Smaller stocks don't have as much. Let me just show you this. Let me show you the run-up. Let me show you the run-up right now. Look at the run-up in the Nasdaq, right? Huge, 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 huge run-up in the Nasdaq. Look at the RSI right now, right? This is just way, way too much. But look at IWM. Now, it's down right now, but it hasn't been going up, 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 up. It's been going sideways, and it's still outperforming the Nasdaq by a factor of 50%, 40 to 50% on a 12-month basis. Let me show you what I'm talking about. We are up 58%, right? 1-year return. I think we're up 40%. Yep, 40%. I know my numbers. So say 60 rounded up to 60 versus 40. That's about a 45, 50% higher. So the Russell, I like a couple of stocks. They don't have as much correlation to the overall market. And Academy Sports, outdoors, ASO, pulling back a little bit. It's an outdoors company, leisure, outdoor, Russell 2000, shopping goods, provides sporting goods, outdoor recreation. We're in the middle of a summer. Summer's, we're only in July. We still got August, September. These stocks usually go up towards the middle and end of summer. 210% annual return. And technically, the stock looks really, really good. I wouldn't be buying large stocks right now. Not today. So looks like it's a nice pullback. RSI is not overbought. It's neutral. Looks like we're going to shift higher again. Other stock, entertainment company, iHeartMedia Group. What did they do? Let's take a look. 1-year return, 267%. Outdoor, media, entertainment, radio, digital, outdoor, mobile, live events. Summer, on-demand entertainment. People want to get out. Market cap of less than $4 billion. So again, I like the stock. I like the pullback. It's not overbought like it was over here. It's pulling back to neutral territory. And I think this stock, IHRT and ASO, are going to run up. Again, markets are down. Be very, very careful. This is not a time to be a hero. Momentum levels are haywire right now. There's only 40% of stocks trading above $2 that are above the 50-day moving average. So the market is really bearish right now. It's not neutral. It's not bearish. It's neutral. It's not bullish right now. So you've got to be very, very careful. And I think the bonds are grossly, grossly overbought right here. I think they're going to start coming off of these levels. All right, before I let you go, I've got something really important, timely, and something you need to pay attention to. Folks, the current market environment has made it harder than ever to pick promising stocks. I mean, just look at what I went through right now. Momentum levels, new highs. Meanwhile, only less than 50% of stocks trading above the $2 price range are above the moving average. It's ridiculous. Nasdaq stocks are overbought. Interest rates are, well, I don't know if they're set to rise, but it looks like they're set to rise as soon as the end of summer. It sure looks that way. And hot stocks are harder to find than last summer. Much harder. Last summer, we were on an upswing. Right now, we're in a very choppy, strategically difficult market. The old buy and hold strategy may not be the best approach right now or going forward. Investors need a more systematic approach, a way to find out what level to get in and out of a stock, how much to buy, and what profit target should be. And I've got it for you. Well, folks, I've got a strategy that does just that. And it accomplishes this by using a simple, what I call the sniper line. Sniper line. This line helped me achieve triple-digit gains on stocks like 261% on Nike, 400% on Disney, 740% on Anthem Health. And I want you in on it. Don't miss out. All you have to do is just buy a stock or buy an option or buy a put or sell a stock. Easy. No complex spreads, no combinations. Simple, easy, and effective. And over the last 7 years, on average, every 16 days, winner with loser gives us a 56% return on trade. That's impressive. And it's got a profit factor of like 1.4, 1.5. It's a winning system. And I want to teach people like you how to invest and approach the market systematically. Don't you want to learn how to invest and approach systematically in today's uncertain periods? Of course you do. Look at the market. It's down 500 points. Click on the link below to learn more about the Sniper Trader Pro service. Do it now. This is the perfect time. This is why I'm releasing it right now. And as always, make sure to like this video. Subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when I give you amazing videos with actionable trades like this. And have a great, great Thursday. Keep your eye out for the job report at 8:30. It's coming out in about 58 minutes. Follow the link below. Check out the Sniper. Do it now. And have a great day. Bye, guys. I hope you're enjoying your summer.